Today is Wednesday, the 31st of March, and I welcome you all to the Vetiva breakfast meeting brought to you by Vetiva Capital Management in partnership with Monte Africa Report. Before we begin, I'd like to remind everyone that this meeting is being recorded and may be shared with third parties, and we are currently broadcasting live on Facebook. This presentation is scheduled to hold for 30 minutes. That includes Q&A at the end of the presentation. However, if due to time constraints you are unable to answer all of your questions, kindly forward them to .com. Today we'll be hearing from our equity and fixed income traders and from our partners at Monte Africa Report. First, I'd like to go to our equity trader, Sean Oshamo, of the West African market and the activity on the NSE. Good morning, Sean.
Good morning, Joshua, and thank you all for joining us. We start off with performances of some of the regional markets. The BRVM sustained Monday's green close to keep the week-to-date performance positive. The composite index closed 8 basis points higher for a week-to-date close of 32 basis points. EcoBank Cote d'Ivoire led the gainers chart with a 7.42% price appreciation in that market. Volume traded declined significantly by 84% as the positive close moderated year-to-date returned to negative 3.65%. For Ghana, the benchmark index inched up 2 basis points to close at 2,213 points, representing a weekly gain of 6 basis points and an overall year-to-date gain of 13.99%. Looking at the activities and the counters that moved the market, Societe Generale, Ghana, and Total Petroleum were the major gainers in that market, while Cowbank, for the second consecutive day, closed in the red, losing 154 bips. Moving to Nigeria, in yesterday's session, the ASI could not sustain consecutive gains in the market as the Burs fell 57 bips to close at 39,267 points. The negative close was largely due to the decline we saw in the cement giant Dansem, which closed down 402 bips after a late 190,000 unit cross at 116 naira. Then ETI, Transcorp, International Brews were other gainers, other losers in the market during the session. Some of the gainers actually were Zenith, which closed 249 bips up after it was lifted to 2260 level. We've seen that counter trade around 2205 in the last say 4 or 5 sessions, but it was lifted to 2260 yesterday as we saw a few local buyers in the name. Then Guinness and WAPCO also enjoyed some upward price movement. Then for the activity level, bearing the huge crosses we saw in the previous session, the volume and value declined significantly by 36 and 69% respectively. Market was relatively quiet as the banking sector dominated with 64% of market turnover, largely on the back of trades in Guaranty Trust Bank as well as Zenith Bank, and they both accounted for 46% of total market turnover. Quickly to sectoral performance, we saw Zenith Bank and GTB also leading the banking sector to a positive close of 94 basis points, despite the 472 bips loss we saw in ETI, while the loss in Dangote Cement, like I mentioned earlier, dragged the industrial goods sector to a negative 190 bips, 190 bips close in the session. So generally, it was a quiet session for the market yesterday, and it also closed negative on the back of Dansem negative close. Investor sentiment continued to stay up following 3 consecutive days of green close. That's for the market breadth, somewhat showing some level of positive sentiment, but not too strong. So going into today, we expect the final set of full year 2020 results to be released into the market. We expect investors to watch out for standout performer like we saw in livestock feed yesterday. It improved its PAT by about 373% year on year, and investors reacted positively to the results, snatching up a few units that were on the offer side to push the stock to close fully bidded. Then BOA also released its full year result after market close yesterday, with a 20% top and bottom line improvement, and also declared a dividend of 2 naira 6 kobo. We do not expect positive reaction to this result based on dividend yield, though the result is quite impressive for a 20% top line and bottom line improvement for a challenging year like 2020. Overall, we foresee a mixed session to trading activity today. So that will be for the equities market. Thank you.
Thank you very much, Joe. Next, fixed income trader, Omaregi. Good morning, Omaregi.
Good morning, Joshua. Good morning, everybody. I'll start with the money market. Yesterday, the money market was very liquid, coming from the 230 billion positive liquidity figures we saw on Monday. We saw opening liquidity figures for yesterday hit the high of 377 billion, and this improvement in system liquidity was largely spurred by OMO maturities of about 170 billion, which came into the system yesterday. Despite the very liquid system, money market rates maintained to trade between 9% and 13% due to the high funding pressure. So our expectation for today is that money market will trade at higher levels as market participants fund for a potential OMO auction on Thursday, as well as FS retail auction slated for Friday. Moving on to the FS market, the parallel market remained flat to trade at 485 naira to $1, while the in-window traded at a high of 411 naira to $1, closing at 409 naira to $1. For the CBN interbank market, we saw that close at 381 naira to $1. The industry turnover increased slightly to $47.93 million yesterday, coming from $30.84 million recorded on Monday. We expect the Naira to continue to trade at these levels, barring any change in the liquidity in the market. Moving on to the T-Bills market, the T-Bills market traded on a very active note yesterday, with a lot of activities recorded in the NTB and OMO segments. In the NTB space, we saw offers for the newly issued one-year paper at around 6.5% and 6.55 levels. Though the demand on that bid during the start of the trading session was very weak, however, as the trading session progressed, we saw activity picked up on that bill. As a result, few trades were consummated on the newly issued one-year B at 6.5% and 6.55%. We also saw interest on the September NTPs, with few trades consummated around 4.15%. In the OMO segment, we saw sustained demand for the long-dated OMO papers as investors continue to hunt for high returns. The long-dated OMO papers were offered at around 7%. So very quickly, I'll share my thoughts on the NTB auction that is happening today. The DMO is offering about 95.7 billion across the 3 usual tenors. The 91 days, they're offering 10 billion, while the 182 days, they're offering 17.6 billion. So our expectation for these two tenors is that rate will maintain, given that after the astronomical increase in rates that we saw in the last auction in February, where rates went up by an average of 134 basis points across the three usual tenors, the DMO has maintained rates in subsequent auction after that. The first auction in March and the one that happened on March 17th, the rates on these two tenors were maintained. So what we believe is that the DMO and investors have actually come to a level in this region where both of them are very, very okay with what we currently have at those ends. So we believe rate for the 91 days we maintain to around 2%. If it's going to close higher, it's probably going to be just 10 basis points or 20, but we believe it will maintain. While the 182 days, we also expect it to maintain at around 3.5%. For the 364 days, the amount on offer there is 68.1 billion. Our expectation is that rates will probably close between 7 to 8%. Looking at what happened at the bonds auction, where the DMO sold about 70 billion more than what they had on offer, and also what has happened in the subsequent NTB auctions. The first auction in May, they sold about 20 billion more than what they had on offer, and the second auction, they sold about 15 billion more than what they have had on offer. So what we have been able to pick from all this happenings is that the DMO is willing to sell more than what they have on offer, even if that means that we increase the marginal rate. So we expect rates to probably close between 7 to 8, more likely close between 7 to 7.5. So as investors, we factor in this sentiment, given that the DMO increased rates across board in the last bond auction and subsequent NTB auctions. So their expectation is what will drive their bids, and give or take, imaginary will fall between these levels. So our expectation for today is that the NTB market will trade on a very lethargic note, given that the attention of market participants will be shifted towards the NTB auction, which is happening today, as they all wait on the result of the auction to give guidance as regards the direction of short-term interest rates. I'll quickly conclude with the bonds market. The bonds market traded on a very active note yesterday. Activities was skewed towards the mid to long end of the benchmark curve, with the bid-ask spread narrowing during the course of the trading session. We saw few trades consummated on the 2050 maturity at around 11.72% levels, which was like 13 basis points drop from the opening level of 11.85%. Our expectation for today is that the bonds market will trade on a very cautious note as market participants close out their position for the month end. That will be all for fixed income.
Thank you very much, Amorigi. Next, we'll hear from Temple Ashaju, our partner at Frontier Africa Report. Good morning, Temple.
Good morning, and thank you for listening. We'll start with West Africa, where Moody's yesterday released a couple of reports across some African countries. Nigeria is one of them. It says that Nigerian banks' loan quality is expected to weaken this year, 2021. Profitability is expected to also go lower as revenue growth will fall further. And all that is based on the fact that coronavirus support measures by the government and the central bank, including all of the loan repayments holiday that have been granted, is expected to be relaxed. So that at the end of the day will impact all of these projections, or explain these projections that Moody's is giving. It also says weakening capacity of the governments to support the banks due to the negative outlook it has already placed the Nigerian government in terms of the credit rating. For the brighter spots that they have, however, it says that Nigerian banks will hold or really has some robust capital buffers at this point. It expects the foreign currency shortages to ease going forward. They also made a comment about Egypt regarding the Suez Canal blockade. They're quite rather positive on that. They do not expect any disruption to the balance of payments of Egypt when it comes to the sovereign end of things. It also says that such a temporary disruption is not expected to have any material change on Egypt's expectation of its return to the pre-crisis stage, that's pre-pandemic stage when it comes to receipts of global trade recovery and all that. Ghana's got a very ambitious minister for the tourism sector. He's looking to be able to realize some $5 billion in terms of revenue generation from that segment or sector of the economy. How he wants to do that remains to be known. Everyone is watching to see how that pans out eventually. Back to Egypt, where you've got a major company, Integrated Diagnostics Holdings, looking to get listed on the Egyptian Stock Exchange. They're already listed in the London Stock Exchange. They got the approval of the Financial Regulatory Authority recently. Go ahead and do the listing. The main aim of this listing is to be able to onboard Egyptian institutional investors that are missing on the register of the company, because a lot of the shareholders and investors that they currently have are spread across UK and Europe. They're looking to localize more. For the southern part of Africa, you've got IMF and Namibia resuming talks over the approval of some 4.5 billion Namibian dollars, which is equivalent of some $273 million in emergency loan. That's something that Namibia is trying to access from the IMF to be able to combat the effects of the pandemic. Because as we all know, Namibia, I think, has the highest rate of unemployment at this point, having been heavily impacted by COVID-19. And in recent times, there's been surge in infection rates to over 1,000, around 2,000 actually in that country. South Africa's got its foreign direct investment inflows rather deep into 51 billion rands compared to what it had in the preceding year. Annual portfolio outflows also came in higher than they had in the preceding year. Angola Central Bank held its rate unchanged. Zimbabwe also had its meeting. They held rates unchanged. In the eastern part of Africa, you've got ride-hailing company Bolt beginning food delivery in Nairobi. That makes Kenya the third country that they have as the country where they have food delivery after South Africa and Ghana. And we all know that the Kenyan government has now announced some kind of a partial lockdown at this point. It's one of the reasons that Bolt has taken advantage of that. And finally, Tanzania's president picked the Minister of Finance, Philip Mpango, as his vice president, following the installation of the former vice president as the president at this point in time. These are headlines for today at Frontier Africa Reports. Thank you for listening.
Thank you very much, Temple. We've now reached the Q&A session. If you have any questions for any of our speakers today, you could raise your hand if you prefer to speak, or you could drop a comment in the Q&A box or the chat box, or if you are listening on Facebook, you can also leave a comment there. But it appears that we have no questions today, which means we have reached the end of today's meeting. We thank everyone for joining us. We hope that you will join us again tomorrow for our last edition of this week. Thank you for joining us, and you have a good day. Goodbye.